VGT versus QQQ. Which is the better growth ETF to hold in your portfolio or to as a better buy today? You know, VGT and QQQ have been averaging over 19% per year for the last 10 years. That's amazing news because if you're trying to grow your portfolio and gain more money in the process, it is great to hold one of these good growth ETFs. Now, there are years where these ETFs will go down in value, like in 2022, it went down 33%, but in 2023, they both went up about 53 to 54%. So if you hold these for the long term, it could be a great ETF for your portfolio. Now in today's video, we're going to break down which is the better buy for you guys today. We're going to look at the strategy. We're going to look at the costs of these. We're going to look at the diversification and the performance. And at the end of the video, I'm going to let you know what is my take and which ETFs I am buying today. Alright, so let's get started. Hey guys, my name is Steve, and I run the Frugal Expat website where we try to help people to save more and invest better. And if you like this video and you like this content, make sure to hit that like button and subscribe. And I'll continue to create great content to help you out. Alright, let's get started with this video. We're going to start off with the strategy as number one. VGT is the Vanguard Information Technology ETF, which tracks the MSCI Information Technology Index. So it's got about 300 different holdings, and it not only holds large cap tech companies, it also holds mid cap and small cap tech holdings as a part of its strategy. Now, if we take a look at QQQ, QQQ is the Invesco QQQ Trust, which tracks the NASDAQ 100. So it's cap weighted as non-financials, and it's got the top 100 companies in the NASDAQ 100. Now, these companies are just large cap companies, which consist of technology. It consists of consumer discretionary, healthcare, and industrials as part of the sectors of this ETF. Now, if we're looking at these two different ETFs, VGT is primarily just a tech ETF. Now, if you're a tech bull, kind of like me and like some other people, and you want more tech within your portfolio, VGT could be the better buy right here. Now, QQQ, on the other hand, has got a couple different sectors. So if you're looking for a good ETF that has a couple different sectors besides tech and is growing for the long term, QQQ could be the better buy. Now, if I were to pick a winner on strategy alone between VGT and QQQ, it would be QQQ. That's because it's got a few more different sectors. It's got 100 different holdings, and it's kind of cap weighted. So that allows it to kind of grow and not be just focusing on one different sector, because if that one different sector does fall off the planet, you could be screwed. But with QQQ, you do have a couple of different sectors bringing up the rear. All right, let's take a look at the cost. Now, if we take a look at the cost, we're going to look at the expense ratio and the cost of each share. So with the expense ratio, we're going to look at VGT. Now, VGT has an expense ratio of 0.09%. That's good news for you. If you're holding VGT, it's got a 0.09% expense ratio, which makes it costs about $9 for every $10,000 invested. Now, QQQ, on the other hand, has a 0.20% expense ratio, which makes it about $20 for every $10,000 invested. If you want a cheaper version of QQQ, QQQM is a cheaper version. Same exact ETF. One was created in 1999. One was created in about 2020. Now, QQQM, on the other hand, is about 0.15% as an expense ratio. So it's a bit cheaper. Now, if we take a look at the share prices of both of these, VGT's share price is around $643, while QQQ is around $540. Now, those are two different things. In VGT, you can buy fractional shares, which is a little piece of it, not the whole thing, on various different brokerage accounts like M1 Finance, Vanguard, and Fidelity, and also Robinhood as well. And with QQQ, you can buy fractional shares on M1 Finance, Fidelity, and Robinhood, not Vanguard. You must buy one whole share because Vanguard doesn't offer fractional shares for non-Vanguard funds. So that's a little bit of things. So if we're looking at different costs, in the long term, the cost of VGT is going to be a lot less due to the fact that it's got a 0.09% expense ratio, which is less than both QQQ and QQQM. So if I were to have to pick a winner for the cost alone, I would say VGT wins this category. Now, if we're going to move on and take a look at other things, let's take a look at the diversification. Because when we're looking at a good ETF, we may not want one ETF that's holding maybe 50 to 60% all in one stock, because might as well just buy that one stock. We're going to look at how much of the diversification is, looking at the holdings, looking at the different sectors, and looking at how much money is put in each different holding. So let's take a look at the diversification of each of these ETFs. If we're looking at VGT has about 316 different holdings, and it not only has large cap, but it's also got mid and small caps. Now, it only has about one sector, which is information technology. And this information technology is broken up into different many type of sectors in the tech industry. We have software, we have semiconductors, and we also have hardware, a part of this tech sector. And these companies are going to be, you've got NVIDIA and Broadcom, which is part of the semiconductors. You've got Apple and Microsoft doing more software. And you have other companies like IBM, which is a part of this ETF. Now, if we were to take a look at kind of the breakdown of these holdings, we're going to see that NVIDIA, Apple, and Microsoft make the top three, with Broadcom coming up in the number 4. The top three make up about 44% of this ETF, with Broadcom coming in with about 4%, makes it almost 50% of this ETF are in the top 4 of this ETF. Now, if you like these companies and you want to hold more of them, well, that would be a good reason to hold VGT. But with 316 different companies and about 4 of them making up about close to 50%, means this ETF may not be as diverse as you're looking at. Now, if we take a look at QQQ has about 60% in information technology. It's got 20% in consumer discretionary, and it's got other different sectors like healthcare and industrials as well. Now, with QQQ, you do have Apple, Microsoft, and NVIDIA making up the top 3. You also have companies like Amazon and Tesla and Google that is a part of QQQ. You also have Costco, which is another great company. Now, in this QQQ, you also have just the top 10 making about 50% instead of the top 4. But you also have 100 different holdings, so the other different holdings do make up the other 50% of this ETF. So that's great news. So you're not only putting all your eggs into 1 to 2 to 3 different companies, you're putting it into maybe 10 companies. You're putting it into 100 different companies. So if I had to pick a winner between VGT and QQQ on diversification alone, it would be QQQ. QQQ just diversifies it just a little bit more. Now let's get on to our next section. Next section is going to be performance. Now, when we're taking a look at these 2 different ETFs, we got to look at kind of when they were coming out, what the performances over the last year, maybe 5, 10 years, and even over the long term. Now, VGT has been around since 2004, and QQQ has been around since 1999. So they have had some ups and downs through the years due to market crashes and market ups. And so we're going to take a look at some of these performances. So when we take a look at the 1-year performance, we can see that VGT is doing a lot better than QQQ. Not a lot, but I mean, it's outperforming it. And that could be because of the tech has been kind of outperforming the last couple years. Now, if we take a look at 5 and 10 years, and if we take a look at 5 and 10 years, we can see once again that VGT is doing much better than QQQ. So if we want to really take a look at how they have done over the long term, let's say set our parameters to January of 2005 to about now. And that can give us kind of a good long-term view of what it looks like during these ups and downs. So let's take a look. Over the long term, VGT has kind of brought up a little bit of outperformance of QQQ in the long term. That could be because of the last 5 to 10 years. It's got a 1,582% rise since 2005, and QQQ has done 1,513% rise. Now, if you can see through the years, they have kind of matched side by side, but in the 2010s, QQQ did take the lead, and around 2018, 2019, VGT started to kind of even up, and as we see in the last 5, 6, 10 years, we can see that VGT is slightly gone above QQQ. Now, those things, I mean, could be of interest to you, but we can see that both of these ETFs have performed quite well over the long term, and they are great buy and hold ETFs to add to your portfolio. Now, let's take a look at what I think in my analysis of both of these ETFs. Now, if I take a look at both of these ETFs, I want to take a look at, like I said, the cost, the diversification, and the performance. Now, in the long term, we see that the cost of VGT is much less than QQQ. We can see that the diversification of QQQ is much better than VGT. So in the long term, if the tech sector does fall, then QQQ will have other sectors propping it up. And in the long term, both of these performances have done pretty well. VGT right now is outperforming QQQ in the last 10 years, and in the long term, it has slightly gone ahead. But that's just slightly. So if I had to have a choice, one of the best growth ETFs on the market would be QQQ. Now, for me, I own both VGT and QQQ, and right now I'm putting most of my money into VGT. Now, but that's just my personal belief. I am a tech bull, and I believe that the tech market will continue to grow over the long term, and so I'm going to continue to create and kind of put more money into VGT. So that's just a little bit of those two different ETFs. Now, if you're looking for some more breakdowns of ETFs, I have created a video of SCHG versus QQQM. And if you want to check that out, the video is going to be right up here. So take a look, check it out. Let me know what you think. And let's continue to talk about this in the comments. What is your favorite growth ETF? Is it VGT? Is it QQQ? All right, until next time, I'll see you.